Welcome to Trading Nation. I'm Brian Sullivan. We're joined by Tony Dwyer, Chief Market Strategist at Canaccord Genuity. Tony, it's all about tax reform right now, and I know you guys have done some good work on this. And as we look ahead to next year, is there a way to quantify roughly that if tax reform passes, corporate tax rates go to 20 or 22% or 25%, that every X move down in tax rates will add X to the S&P 500 earnings?
We haven't done it to the exact percentage, Brian, but David Aurelio at Thomson Reuters IBIS did a great proprietary study for us, company by company, and found that if you look at 2018, if you cut the corporate tax rate to 20%, and that's the only legislation that's done, that would increase S&P operating profits by 10.5%. Two of the groups that would benefit them, or sectors that would benefit the most, are the financials and the information technology. So I think that's kind of the focus as you go into 2018.
So a corporate tax, because we've had guests who've said corporate tax reform is already passed in. Sounds like you don't agree with that. If the corporate tax reform does get passed, we could see another leg up for the markets?
Oh, for sure. For sure. We're going to see another leg up for the markets, I think, regardless, because we're still, one of the arguments, and I'll bring corporate taxes back in a second, one of the arguments against equities lately has been that you're going to see the peak in the cycle because the yield curve has been flattening. It's currently about 60 basis points on the 2-10 U.S. Treasury spread. So, and historically, when you look at the last three cycles, from the initial move to that 60 basis points, which happened last week, your median gain is 63% in over 1,080 days for the market. So we are so far from, quote unquote, the peak. So it's not whether you have another leg higher. Corporate taxes may give you an extra boost to that leg. So just to put it into perspective, our current number is 140 in earnings for next year. We're using a 20 multiple. If you add 10.5%, as the study showed, at a 20% corporate tax rate, that'd get you to about 155 off of my 140. That put a 20 multiple on that, and you're looking at over 3,100 on the S&P 500.
Wow. Listen, you've been the biggest bull on Wall Street for a long time, and you have been right, Tony. $2,800 target next year, more than $3,000 if we get this big tax cut, perhaps. At what point do you get nervous about the markets? I mean, there's got to be something that's going to make you less bullish.
Buddy, I've been calling it the Sanford and Son correction. You remember that show, Sanford and Son, when Fred Sanford would... Perfect.
Why do I even know that? I don't know.
When he would get stressed, he would grab his heart
and go, I'm coming wheezy, or something like that.
Yeah, here I come wheezy. This is the big one, right? And then it was absolutely nothing. And I think we're in kind of for that kind of correction where it's just small, but because of the lack of volatility, it feels really big. And one of the things that I point to is the Citigroup Economic Surprise Index. When I increased my target this last March and April timeframe up to 2470, I since raised it to over 2500, but I did it early because the Citigroup Economic Surprise Index was pricing in such weakness in economic indicators. It's opposite day. The Citigroup Economic Surprise Index is now a little bit too, I would call it almost euphoric. And at the same time, when we look at even today's action, you have FANG is getting killed. You're having the Bitcoin reversal. The Senate looks like it's going to bring the bill to the floor, and yet it yawned at that, or you actually saw a small downtick in the market. So I think the market is kind of ripe for one of those, wow, 3%ers that feels like 30% because volatility is so low. But ultimately, it is to be bought. I want to be crystal clear on this. I'm not trying to trade for a correction. I'm want to be able to know it, if it comes, use it to our advantage because we're far from the peak.
Yeah, okay, it's fair. We know that you're bullish, obviously. And by the way, I want our audience to know I had no idea you're going to reference Sanford and Son, by the way. That was all just...
That was awesome. I was very impressed.
I don't know.
But that's why you sit where you sit, bud.
Because I can do the Sanford and Son
right,
theme song.
Right, you're that quick. Come on.
Oh, my goodness. Tony Dwyer, all right, 2,800, maybe above 3,000 with all the right pieces put in, still bullish. Tony Dwyer, Canaccord Genuity. Always a pleasure, Tony. Thank you very much. Folks, thank you for watching Trading Nation. I'm Brian Sullivan.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.